When you made your well-known prediction about the Tesla stock price, did you imagine the response that would occur and the motivation to invest in Ark funds?
We got a lot of pushback by the traditional financial world, both the buy side and the sell side of the street. Where we found great success was with young people. They knew they loved this car. You know, they went out and tried this car out. They knew that they wanted to be invested. Tesla wasn't in any index. Most traditional firms now are very index driven. And so people who were looking for portfolios with Tesla in them did not have many places to go. And we have a social strategy. And so we were educating, pushing our research out about Tesla, about electric and autonomous. And it captivated the attention of a lot of young people.
Do you think the incumbent car manufacturers have a chance to catch up in any meaningful way?
I think they waited way too long to turn their R&D spending into electric. And we know, because of Tesla's barriers to entry right now, the battery technology is different from any other electric vehicle, except for a couple in China. It's cylindrical lithium-ion batteries as opposed to pouch. And we know that Tesla's costs are going to be lower for at least the next 3 years than traditional auto manufacturers. We also know that Tesla, and this is taking a leaf from Apple's book, and this is when people ask me this question about automobiles, I reflect on what happened to the handset industry, Nokia, Motorola, and Ericsson. When Apple came along with the iPhone 7, they had not defined the market correctly. They were thinking about the latest fashion fad to create their next phones. Whereas Apple created a chip because it knew this was going to become a computer and that we'd be able to access the internet, and voila. And it ran away with the lion's share of the profits of the market, even today. Tesla's doing the same thing with autonomous technology. It designed its own chip. No other auto manufacturer has done that. And it has been collecting miles of data for years now. It now has effectively almost 2 million robots, including my Model 3, out there collecting data. So it has more real world driving data than any other company. It's going to be very difficult to catch Tesla in the United States when it comes to autonomous. When it comes to electric alone, well, maybe their brands will mean some success. I know the F-150 Ford Lightning has had to double its production because of the orders. We're very happy to see that. We want, and there will be a consolidator, sort of like Walmart in the retail space. Walmart and Costco and Target have consolidated it more and more as Amazon has come through. We think there will be a consolidator in the auto industry, but we think it will look very different from what it looks like today. Interestingly, I think a lot of people are trying to figure out what's going on already, because auto sales in the US peaked at a seasonally adjusted annual rate of 18.25 million units in April, last April. They've dropped from 18.25 to 12.4 in December. And I think what is beginning to happen is consumer preferences have shifted. So the next car they want is an electric vehicle, and they're willing to wait for it.
All right, everyone, and now that you've had a chance to listen to Cathie Wood's remarks regarding Tesla in her most recent interview, I want to take some time and actually process what she said. Because yes, while we all know that she is a massive Tesla bull, I want to see what her current portfolio allocation is like, because I want to see how she is handling Tesla, how she's managing it, etc., etc. Because we know on one side, she is selling other stocks like Palantir. In fact, if I'm not mistaken, I believe that all of it is sold. We could see a portfolio allocation of 0 across all of her ETFs, which brings me to my my next point. We're going to be taking a look at not only the ARK ETF, but also her other ETFs like ARKQ and ARKW. So anyways, the ARK ETF is currently sitting at a portfolio allocation of 8.89. I'm just going to say it right now, this is remarkably high. The reason for that is because, again, if I'm not mistaken, this used to be at around 7.98 and even 7.88, and I think it was even lower back then, but right now we don't have all the data. We can only go back till December 31st of 2021. And then if we go to ARKQ, it is even higher. It is at 10.39. And remember everyone, the ARK ETFs across all of them, the maximum is around 10, and that is because of portfolio allocation. They don't want to go too overboard on Tesla, but this is a number that they usually cap it off just for their own portfolio protection. And then if we go to ARKW, their portfolio allocation is 8.14, so it is going to be less than ARKK, but still a good number because if we're going to that maximum number of 10, it's still, again, remarkably high. And actually for ARKQ, it used to be at around 7.18. This is what I was talking about. Going all the way from 7.18 from January 24th of 2022 and even 7.13 January 28th, 2022. We are now sitting at 8.14. So why exactly did she decide to increase her position? And also the next question is, does she want to add more? We're going to be seeing this data coming throughout the next few days. Jerome Powell actually recently stated that he is going to be raising the basis points by 25 instead of 50. This is very important because it's causing some people to wonder, okay, if you're going to do 25, what is the rest of the year going to look like? Are we going to have to do more rate hikes compared to if we just did a 50 basis points hike and then we would actually have less throughout the year, if that makes sense? I can make a whole different video on this, and even let me know in the comment section below whether you think 25 basis points is going to be bullish or bearish throughout the entire year, and we do not know if the market bottom has even occurred yet. Now that brings me to my next point, because where can we see Tesla going in the future, especially because we know Cathie Wood's price target on Tesla was $15,000, but with the adjusted share price, because remember, you have to account for the split, it is now at $3,000, and it's probably even higher, but remember, this is just throughout her 5-year time horizon. Right now for Tesla, even though it may seem like we are extremely bearish, because I know the number $870 per share, we used to be at around $1,200 per share. We're actually quite bullish, not 100%, but we are getting there because Tesla is starting to reclaim a lot of moving averages. This is also really interesting because over here you can see that it actually went exactly to that moving average, and you guys can make the argument that yes, it did break a lot of them, however, it is finding supports at these key levels. And also aside from that, we need to understand, when is Tesla going to have a breakout? Well, we cannot have a breakout if people are still very uncertain and if people are still very fearful about how the rate hikes are going to play out, as I just mentioned. For example, the S&P 500 recently went, I believe, from $410 a share all the way, we are now sitting at $400, almost $40 per share in a matter of a few days. And also, the S&P 500 is also starting to reclaim a lot of the moving averages. Now, this means nothing in the long term because we know that the markets are going to start going up at some point, right? However, it's obviously not going to be in a linear formation. It's definitely going to have volatility throughout time. However, in the near term, we still have uncertainty. I would not be surprised to see a lot of ranges. That means Tesla may not be doing much for the next few weeks, and even for a month or two. The reason for that is because Tesla and SPY are pretty correlated. I mean, after all, Tesla did join the S&P 500. So again, I would not be surprised if Tesla starts ranging from $800 a share all the way to $880 a share, even $890. And finally, when will the Tesla breakout be happening? I think that'll happen as soon as there's more certainty, as soon as there's more clarity from the Federal Reserve as to where the economy will be in the next few months, because inflation is still very much an issue. Now, with that being said, everyone, thanks again for watching. I'll see you guys in the next video.